All right. Hey, how's it going, guys? Welcome back to mentfx. So one of the coolest things about having a system that actually gives you a template to understanding price action, to understanding how prices move, when they may want to set up, when they may want to move, or when they may want to stall out and become kind of useless or not worth watching. One of the best things about having a template to your trading or understanding how a market functions entirely, I'm going to show you some examples right now, is that you're then able to take that and apply it to any given market that actually ends up delivering, and can apply it to any one trade that you see somebody else take. That way, you can actually build proper conviction and confidence in the trades that you execute, because as a lot of you know, and as I've always taught, conviction in what you do, in the process that you undertake, is the only thing that leads to actually becoming profitable. Most people stay unprofitable because their only focus is, how do I masturbate myself psychologically? And what is the next best pattern that's going to make me money? And these two things on repeat put together through the sphere of everything on YouTube, on Instagram and all this shit usually ends up in the same place. On the other hand, someone that, and again, bear with me here, so let me just open this up, someone that takes the time to study, so, this is specifically from the private members portal, which is being worked on and improved on and added to over and over and over again, but somebody that approaches the market from a standpoint of some kind of cycle, of some kind of understanding as to what creates a trend, how a trend functions through multiple timeframes, and how timeframes actually function in terms of what timeframes are going to provide the best kind of entries and how are they going to work together. When you have a way to approach price from that lens, all of a sudden, it becomes a lot easier to study the market, to understand the market, to study moves, to understand the moves, and to, in the future, get involved in future moves that also share similar traits and end up making beautiful runners and beautiful moves. So an example of this, and what I want to do today with you guys, is I want to open up the mentfx private Discord right here. And basically today, we had a number of people trade a number of things, but most notably, we had a lot of people take some NASDAQ or US 100 or NQ, if you trade futures, however you want to call it, base shorts that ended up very, very good. And we had one of our members ask, how did she do it? How is she doing this? How is she making all this money? How is she trading these beautiful trades? Where are they coming from? And what's cool is, without even asking the specific member about how this trade was come to, right? I could actually go in, and as I did when I go into it, as I went into it right here, I understood very quickly where the trader traded, why she traded, and where she would have likely traded had she not entered this. So bear with me, this will all make sense in a second, but overall, I could pinpoint the entries, despite the fact that I don't personally trade a 15-second chart, for someone else's system where they are trading a 15-second chart, just using and applying a trend and time frame template to the underlying action. So what I did to do this is, first of all, right, I went and found the actual trade that this member was looking at. So I headed over to NQ just to take a quick look, and I recognized that the trade itself came from somewhere inside of here, right? This is where the trade came from. And the first things I want to ask myself is, what is her EVC? What is creating the overall time frame template, and where are we in the trend template that allows for this to potentially be a move? Okay, so when I look at this, we understand that the EVC is the best time frame template approach to trading any time frame, where the entry, and I'm going to show you this very quickly from the portal material within the private mentorship content, which you can gain access to right now by joining in the description, or by simply watching this and gaining access to a good bit of it right here, where simply you choose an entry time frame by yourself, and then you can take a 6x multiple, around a 6x multiple for a validation, and then around a 10x multiple of that for a context time frame. This is the best time frame template approach that you can ever have. And then you can play around with it a little bit, but this will already give you the fundamentals of a good system. So if I go ahead and make this a little larger, and we decide the entry time frame is a 15-second chart, which is what this member is specifically doing, and we then multiply that by around 6. So if we multiply that by 6, we get the validation, which puts us at around, let's just do it like this, at about 90 seconds, which, as you can guess, is 1.5 minutes. So I understand the validation puts this member at around a 1 minute to 2 minute for taking a look at what's actually going on there. And then simply, if I multiply that by 10, I get the context time frame, which puts us around a 10 minute or a 20 minute. So overall, I know what I'm going to be looking at when I head into looking at this trade, and then to decide if this trade makes sense for me, if this trade makes sense for the rules, and if this trade is something in the future that I would also possibly look at to be able to trade it. Okay, so the first step is actually taking a look at where we exist, right? So first of all, I want to put a kind of green blurb on top of it, and I want to take a look at the 10, the 20, the 1, the 2, and then the 15 second to determine if this is a trade that makes sense in terms of what I would be looking for, and if it follows a general trend template of what we do. So if we take a look at the 10 or 20 minute, actually before I do that, let's get off it. Here we go. Okay, hopefully I didn't see it. Before I even take a look, I know already in my own rule set, and you guys can copy some of these rules as well, that on the context time frame, which is the highest time frame, on average, if you are looking for a long, what you're going to see is price will be above the 10/20 EMA, right? And that's really it. That's all it is. And it's ready to go into a stage 2. And for a short, similarly, price will be below the 10 and 20 EMA. This is a very easy way to orient yourself in an overall market for a given direction. Even if the market is bad or choppy or whatever it might be, this is one way to orient whether or not you should even follow it in a given direction. So I know that if I head to the 10 or 20 minute chart inside of this area, in general, these charts, this price action, should demonstrate that price is at minimum at or below the 10 and 20 EMA, because this is a member that took a short, and I want to figure out where did the short come from, and is this a short that I'm able to personally figure out, trade, and then in the future replicate. So if I go over to the 10 minute, we'll go to the 10 minute first, and I try to find where this was, there is something that you'll instantly spot, and that is that prior to the actual trade, as you can see here, price had, where's my arrows? There they are. Price had pushed down below the 10 and 20 EMA. After pushing down, price began to respect the 10 and 20 EMA lower and was down below it. Then price pushed up into the 10 and 20 EMA, and from there began to push lower at the lower moving 10 and 20 EMA. So overall, at the moment, just taking a look at this, we have the general price rules for the context met, which is that what you have is price that has moved below 10 and the 10 and 20, and therefore has the ability to likely move into a further stage 2 lower, right? So stage 2 is simply an expansion, if you want to think about it that way. Now, I also know that if I head to the 1 minute or 2 minute, there's a few things I'm going to see. The likely thing that we're going to see on a 1 or 2 minute is that price has already proven to make some kind of move. Okay, so it's starting to make a move lower, and it's now pulled back and made a move back up, so it's flushed out, or it's starting to go sideways, okay, at a downwards moving 10, 20, or 50 for the potential of price continuation lower. So I know that this is in general, because this is what I teach my team to do, and this is what I personally look for in my trading. I know in general on the validation time frame, EVC, we're going to see that occurring, given that this is a setup that is worth taking, is something that I should consider, that is something I should add to my repertoire and in the future replicate. So if I go to the 1 minute chart, that's exactly what I should be able to spot. And here we are. Okay, as we head over to that area, what you see is price begins to make a push to the downside, and within making a push to the downside, it corrects into the 10, 20, 50 EMA. And again, I can do this on a 2 minute, because remember, this is around a 90 second. So if we go to a 2 minute, we should see that maybe represented even better. Absolutely beautiful, right? Price pushes lower, overall starts making bearish breaks. And actually, if I go into the mentfx premium indicator available to all members, and I click on direction, you know, this is another way to stack potential confluence, right? Where you have these bearish breaks, right? You have overall bearish, and price pulls back and makes one bullish break. This is oftentimes called a redistribution model, as called in the mentfx private mentorship. And within redistribution models, we assume that price is going to continue moving lower, which is what exactly kind of occurred here, right? So price comes back to the 10, 20, and 50, 10, 20, or 50, while the context time frame is good and the validation time frame is good. So I know in general that if I now head down to the 15 second at this point in time, so I'm going to get rid of these all. There we go. There's also a ton of other options here, but you guys know about that. So let's go like that. So what's cool now is if I head over to the trend template that we have right here. So that was the time frame template that we just kind of worked through. And here's a trend template. In general, for the full cycle, what I know happens on the bullish side at least, is something along these lines. We get a major flush, we go into a stage 1, which creates an accumulation, or in this case, a distribution. We go into a stage 2, then we flush, and we repeat over and over and over again. And this is some examples right here. So you guys can take a photo if you want, if you guys are not part of the private, and you want to just study this and get used to it. But overall, in a bullish scenario of a market, so you'll see this but flipped, what you'll get on average is price that flushes out around a major flush, usually comes under actually all the MAs. So on the opposite side, that would be above. That starts to stage 1, so that starts an overall sideways-based market, which creates accumulation, which creates stage 2s that begin to deliver, which creates new mini flushes that lead to stage 1s and 2s that deliver into price action, okay? So similarly, if I move to the 15-second here, that's exactly what we should be seeing in the overall template of trend. So, for instance, if we take a look at this, right, from a standpoint of what we see here, we want to see some kind of major flush out, which in this case, an MF, is happening right here. Price overall creates a major flush out, begins to flush out this way. So in this case, it's just the opposite way, right? Here we have a major flush out to the downside. Here we have a major flush up to the upside because we're already expecting bearish action. So we have flush out that leads to some kind of anticipation of a higher low, or because we're flipped, an anticipation of a higher low, of a lower high. Anticipation of a higher low, lower high. So again, all I'm doing is I'm flipping this. So this is the anticipation of the higher low. This is the anticipation of the lower high, because we have a major flush out within a market that we suspect is going to continue delivering overall bearish. So that means that already as this is happening, we assume that all this action is for the purpose of distribution. So we assume whatever's happening here is distribution, even if it ends up pushing further, right? But again, if it ends up pushing further, then what happens on the validation, the context time frame, is it begins to invalidate and no longer be clear for an actual trade, right? So in the scenario that distribution is going to hold itself, in the situation this is going to be anticipation of a lower high and actually be a move that wants to create a continuation down move, just like this. In the case this wants to become a continuation up move as per the full cycle. So again, more on this is available in the mentorship, in the portal material. It's very in-depth. We go through a few examples, images, and all the ways in which that it can happen. But you guys can take a photo of this if you want right now. Remember, keep it in your mind. So if that's going to happen, then price needs to distribute down. And usually, for that to happen, right, price will go into some kind of stage 1 and start to create new demand to the top side. So similarly, price should start creating some kind of stage 1 going sideways, because this should be distribution that wants to go lower, and then should create supply, and overall supply should come into the market that takes this market lower. Now there's many ways to enter in the event that supply is entering. Some people, and this is what is going to be taught in the portal because it's not there yet, but I'm going to show some of you guys here publicly on YouTube for completely free, so you can go and test this. Some of the ways that you can do it is you can take the initial supply formation, right? So you just wait for price to overall build some kind of plateau or build some kind of low, and then sell it as you suspect that to be the creation of the first supply, right? This becomes supply. Another way is to wait for it to do that and then set up another supply that comes in after it. This is called the double MB rule as part of the private mentorship. So it's basically double supply. I've also taught this on this channel as an ICI. It's the same thing as this, but flipped, right? Comes down, boom, boom, right? Comes down, boom, boom. And that's the trade you look for. So again, they're all principles that are similar. But these are some of the ways to enter it, where you enter through the initial supply, right? 1. Another way is to enter through the double supply, or through a future supply that forms again, or through a future supply that reflushes and then creates a new supply, and then you sell into it. So you probably have seen prices do something like this before. Another way is to let all this happen, and as price truly delivers, so as price actually creates all of this supply, and that supply becomes validated and price begins to move, you enter on the fact that now supply has really proven itself, right? You have kind of a bigger stop as a result of that most of the time, and then you look to take that into the given direction, right? So you enter after all that supply is validated. So all of those are ways in which I've taught my team and my members to actually think about overall entries in the market within the realm of a proper cycle template or trend template of price delivery, right? That way you can go back and find any opportunity and understand how those opportunities were arrived to. And you're not just stuck there randomly thinking, where was the special zone and the special area? Like, what's going on? Instead, you have a repeatable and properly approachable time frame template and trend template from which you can actually follow price. So we get these major flushes, we create the anticipations of the lower highs, we're creating overall distribution within an EVC that is already proven to be bearish, so we assume that this is now creating a stage 1 and should lead to this, but on the bearish side. We assume that we're inside of this area right here, on the bearish side here. So all we're doing is if we flip this, you're gonna see the same thing. You have a major flush, the major flush leads to the creation of the anticipation of the higher low. So I'm just showing you how this works in tandem with a lot of the stuff that I've taught in depth, but I just want to show a lot of you publicly so you can go and use this, get really good at what you do, get funded with whatever firms you want to get funded with or personally trading, and then hopefully either become a part of the team and gain access to some of the most amazing tools in the space, or come and put the skill to work through Ment Funding, as you can see, like somewhere it's above or below me, okay? Nonetheless, accumulation occurs, or in this case distribution, since we're inverting the chart. Stage 1 undergoes an overall sideways market. That's what's happening right now. And as price reaches back above the MAs, that creates new demand to get long. And we either get long through that demand, or we let demand prove itself and get long as demand proves itself. And then we look to take that move higher. And then this replicates and repeats itself because that's what the actual full cycle of delivery actually looks like. So let me reflip this. So overall, we're entering distribution, and I'm assuming price to go sideways, just like this, right? And like I said, something that's really important to remember, one of the entries can be through the MB, one can be through a follow-up MB or supply zone, another can be through the overall, basically, breakout of this area, right? Now, in this case, I know because I already went back and studied some of this member's entries, right? So you can see the entry right here. This is an example where she's entering off of a future supply that forms after the initial supply, right? So she lets the initial supply come in and then enters through it, which is also similar to the setup that I discussed where you either sell into here, or you wait and then sell into here, or you wait and you sell into overall breakout. So what she's doing here, or what this member's technically doing, is they're waiting for the move to kind of prove itself and then getting in. So what this member did is they basically said, okay, we have supply forming here, right, from a low to a high. This is the creation of what an MB actually is, right? And at this point, supply is validating, right? So overall supply is actually coming in. This is creating a supply zone, otherwise known as an MB1 in this case, or just an MB as I teach it. So an MB is created through which you could have been a sell stopper and been in this trade as is from that point onwards, or very simply into the move as it occurs. And I believe, I'm not 100% sure, that the move our member personally took is probably something along these lines right here. Now I'm gonna double check. Okay, so in this case, they had a risk that was even more smaller, right? So they're willing to do something like this. I'm personally not someone that's willing to do something like that, so I'd leave my risk here. But this is what the overall trade was. So the purpose of showing you this is that you can go back and take a look at something that someone traded at some point. Hey, this thing moved a lot. This market, this gold market, this euro US dollar market, this stock, this future, this US 100, whatever it might be, moved a lot, or moved in a great way, and whatever it might have been. And then the question becomes, what are the practices, or what are the processes by which I could follow to properly be able to get into this so I can replicate it in the future? And this is how you go about that. These are the steps you take yourself from any lens to decide if something was worth trading, if it made sense to trade it, if you should personally trade it, and if it makes sense within your rule book, right? So that's one of the ways it could have happened. Now, I know there was a further follow-up of another entry that also somewhat followed the rules that you see outlined here. And we're gonna see if we can actually spot that ourselves just through a normal play-by-play of price. So what we'll do is we'll open up two markets right here. We'll delete everything on this one. We'll make this a 1 minute or 2 minute, which would have been the validation time frame. We'll auto it just like that. Okay. We will, okay. So we'll go like this. We'll go to all charts. We'll replay this all the way to where we are now, just like that. Okay, beautiful. So there we are. And we have the 2 minute open here. I'm gonna show you that right now by going to indicators and adding the premium one. There we are. And that should add, okay, beautiful. So now we have everything added, okay? So this should make it really easy. So as we take a look at this, we still have our EVC right here. We have the distribution playing out as such on the 15-second in this case. Again, I don't trade a 15-second chart, but I understand the practices that would get a member on a lower time frame into a trade on this given asset, because I know this asset was traded by a member today that took a lot of money out of the market on this given day, right? And then you'd follow management rules to follow this forward. So now the follow-up would be to, again, see a similar thing occur, where the 2-minute, in this case, or the 1-minute, right, basically, again, pulls back to the 10, 20, or 50, 10, 20, 50 as it sees fit, and builds similarly some kind of flush out base distribution that creates a new opportunity to be traded. So again, as we watch this, right, we wait for price to basically kind of prove that it's above, or some of you may actually be willing to take some of these trades here, which is perfectly fine. Those trades can also become available, okay? So I personally would have probably skipped this because it's just not clear for me, even though it can be a really good move. I'd wait for a little pullback here on the 2-minute and hopefully a flush out, right? Because on average, from what I personally study, from what I personally do, right, I like to see flush outs that lead to new creations of setups. I like to see flush outs that lead to new creations of setups. You know, these can work, but I like it when they take a little bit of time. So that's what we'll wait for. We'll see if we can get that. Because I don't know if we do. Okay, it looks like it just takes off, unless it maybe comes back for some reason. So not much, right? Just kind of comes down. I mean, we'll see what this ends up doing. And again, in some cases, there just won't be follow-up entries, right? In other cases, there will be. So here we are on the 2-minute. So if we actually move this up to the 20 or 10-minute, we should see the context rules met, right? There you go. The context rules are under the 10 and 20. So everything is lining up there for a move to continue. Also, I'm going to turn off this because I don't want it in the way. All right, so everything's lining up for a move to be met there. So we're good to keep watching this thing on a 2-minute or a 1-minute, and we do start getting a mini pullback. You know, on a 1-minute, if that's the validation you're using, you have the same thing. You have a pullback back to the 10-20, which might come up higher to the 20 or 50, which is what we want to see in general, right? Because again, I want to see a deeper flush out to create a move along these lines here, over here, because that's what I'd be waiting for in the event that I was looking for a trade, right? So this is already a lot better than any of the other stuff we've seen, where you get this kind of deeper pullback. That's really, really good to see. And again, what we're doing is we're flushing out. This is a little bit ugly for me personally, but if we flushed out better, so what I'm talking about is, you know, if we flushed out like this, I'd be starting to consider trades. But right now, I just want to see price kind of like get away from this or create like maybe a nicer candle. Okay, beautiful. That's exactly what I want to see. And then some kind of pause. Sure. So now what I see, right, is we start undergoing this exact same thing right here. So once again, you don't have a major flush. You more so just have a normal flush, right? So what's happening is you're flushing out like this, kind of on a smaller level, which is still a flush, which is good to see. And again, you're creating some version of an anticipation of the higher low, as such, and that should be creating some kind of distribution, and that should start creating some kind of stage 1, which should lead to MBs, right? So again, similarly to what the trader did here, and if we try to follow the exact same rules, this trader would be waiting for what? This trader would be waiting for price to kind of get below this instead of selling it there, and as it gets below, to sell into the fact that it's confirming that, right? So that's what the trader would likely be waiting for. So we'll just delete this and we'll start watching it, because again, this is now starting to create, you know, potential move. Because again, we don't know where this is going to end. This could make a move up to here and be still a clear short, right? This move could go up to here and then make a clear short. We don't know where that's necessarily going to happen, but what we do know is what should happen in general for a trend template to be met. And in the event that it gets met, then that's what we want to follow. Otherwise, there's no reason to do anything. So let's just wait and see what price wants to do. Okay, so price starts to maybe pause again. This could be distribution. This could be the buildup of that stage 1, right? So again, let's go over here. Again, it could be the buildup of that stage 1. That could lead to new stage 2s, right? That could be that buildup of that stage 1, just flipped, just like that. And within those, start getting created those MBs, or demand zones, or in this case, supply. So again, if a supply was to get validated, it would likely get validated through somewhere here, right? Where again, similarly to this area here, we start breaking below. Similarly to this area there, we start breaking below to start validating supply, just like this, right? This becomes supply validation. Now to some of you, that is an entry already. and that's perfectly fine. And to others, like this member here, the entry would probably be something along these lines where they sell through that low. Again, I don't like my stop being tiny. I'd probably put the stop at minimum behind a candle like this, and then look for the next trade. Okay, so this would tap you into the trade, and now similarly, you would follow up with management, okay? Now, actually, just to bring your attention to something, this would be a follow-up entry right here in the event that you potentially miss this one, as it creates a new supply zone and gives you a new area to sell through right here. Okay, we're gonna skip that though, because it's not important. This is, again, another area for an entry, right, as it sets that up. And you can see it's the same thing on repeat. If I flip it, just to make this kind of look just like this, like this, like this, right? All of this has the same tendency. If you take a look at the actual full cycle as I teach in the full portal material, the same tendencies as any other cycle, as any other trend. Because the reality of trends and understanding trends is that once you understand them and you apply them to a proper time frame template, you have a system that you can rely on forever. And beautifully enough, you can go and look at any move and understand what actions can be taken to catch similar, right? What is happening to catch this thing? And then you can create things like this. So again, all of these act as potential shorts or whatever, right? For all of you trading maybe futures or NQ or US 100 with men funding or NDX, whatever you call it, right? This is how you do it. And again, you would be expecting the same thing. This should start a move. Jesus. Right, so this is the big move. So yeah, this would have gotten into the move into you. And like, again, like based on how you manage this, this is, you know, this is great profit. And then based on your management rules, you take a lot out of this, less out of this. I don't know exactly what any of your rules actually are. So that's where you focus on your management a little bit. But from there, yeah, I mean, you just have phenomenal delivery. And you can take a look at the right here and what it looks like in regards to, yeah, I mean, absolutely phenomenal, right? If you just follow the mentfx double MB rules, where you simply take this range right here, I'll just make it very dark for you, where you take this range right here and you simply manage with the most recent two lows, or in this case, the recent two highs. You simply look at this and you go to the most recent low, which was this one. That's 1, 2. And then all you do is you take your stop and you throw it right behind or a little bit above, just up to preference behind that point. Then you wait. And then you wait, and you wait, and you wait, and you let this, and then it makes another one. So now you get to throw all your stops behind these points here, and you wait, and you wait, and you wait, and you do nothing but wait until you inevitably get stopped. So that's one way to capitalize and take a good bit out of a trend. So like 20 RR there, and then the other ones probably had some other really nice, you know, and this is with a bigger stop. 20 RR there, and then whatever this is, around 15 RR there, based on what your stop actually looks like, or if you enter up in that area, which would be a little bit more. But again, we're not here to manipulate RRs or pretend on RRs, right? Like I could sit here and be like, oh my God, guys, we went 35 RR. But that's not realistic. You want realistic management rules in your system. You want realistic ways to approach systems. You want realistic trend templates to actually apply to price. And the beautiful thing about understanding how trends function, right, is that you start to eliminate all the problems that come emotionally or psychologically when you focus on having proper time frame templates and a proper trend template, because at that point, if you're applying those things over and over and over again, the emotions get taken care of as you get better, rather than the opposite, where it's like focus and force and fix the emotions, be tranquil, be happy. It's just nonsense, right? Go and have a real process. Apply that process to actual trades, get better at taking trades over and over and over again, get good and better at reading action, do it on multiple assets or one, it doesn't really matter, do it on any assets you want. If you trade a lower time frame, do it on one asset. You get moves like this every single day out of NQ, and I actually want to push you, if you're watching this video right now, to go yourself to this thing, to NQ, whatever, and apply this EVC, where a context is on the 10, 20 minute. Just follow it based on those MAs as the blueprint for a trend, and then follow some of these full cycles on the entry and the validation for the exact things we looked at today, right? And this way, whether you're doing it alone or doing it with people, when you go and see a really cool trade or a good looking trade, and you wonder yourself if that's something that you're capable of trading as well, or if you're capable of catching something similar, all you have to do, right, going forward to do that is go and look at it within the realm of the template that you understand, rather than sitting there constantly wondering and waiting for the next person to tell you the next special trick, right? This is your special trick. The special trick is that you do the work and that you're better than everybody else around you because all you're doing, right, is following the template. And you know, it's gonna become really easy if you learn to follow the template over and over again. All right, love you guys. See you in a week or two. I have to take my family on vacation. Love you guys. Thanks.